So if an investor does not understand your investment or what they're investing into, that's your fault. Because it's your responsibility to educate them properly.
Welcome back to video 5 in this series that we're doing right now. This has been so fun, Veena, and I feel like we're just learning so much, giving so much value, helping people really understand what we need to do to go out and raise capital to do more deals, bigger deals, really grow your business. So thank you so much, Veena. You've been just amazing.
Thank you.
So gracious to share all of this information. Guys, we're talking about $1 billion in transactions that Veena has done that she's conveying to you right now for free. So please show your appreciation, leave a comment and say, thank you, Veena, you're amazing. And Veena wants to talk on this video. What we're going to be covering here is 4 specific steps to your first fund.
Yes. Yeah, because people are going to watch this and they're going to be like, okay, now I know and understand conceptually how this works. But okay, how do I practically do anything with that? Yeah, how do I put it in practice? So it's
kind of like this has been the buildup is to this video, right? Because now hopefully you're at a place or soon to be at a place where you need to go put a fund together so that you can start to do these big things.
Yes. And I mean, really, now that we've laid such a great foundation, you guys will have a lot of the steps already working in your mind, or if you've done your homework from the other videos, you actually will already have some of the steps completed.
That's true. You know, I feel like everything up until now has been very foundational, trying to get your head around how this all works.
Yes.
Now let's go to work.
Yeah, because it's intimidating. It's overwhelming. And if you guys feel intimidated or overwhelmed, you're in the right place.
Yeah.
Because it's
pressure
intimidating.
Against that, though, right? So don't let that stop you.
No.
Because
you're intimidated by this.
Yeah, I've been very intimidated by this. I feel much less after hanging around you for a week. But I think that's a very valid point. You know, it's like anything though. I remember doing my first wholesale deal was intimidating. Doing my first fix and flip was intimidating.
Yeah.
I bought a hotel. That's been very intimidating, right? So that's okay.
Yes.
Well, what do we do when we don't know something? We learn about it, we take action, and then you start to get better at it.
Right. And that was part of what you spoke about this weekend at community camp was it was actually very profound. And it's so funny because sometimes when we're on stage and we're saying things, we're like, that was profound to you. This is like, just, you already know this. And
by the way, you've already been doing it quite a bit, you know. I was talking about risk tolerance and how to increase your risk tolerance.
Yes. And one thing you said that like was life-changing for me, which kind of seems like, oh, okay, you should already know that. But you said 90% of the things that you worry about will never happen.
You know, I was thinking about that when you were telling your story in a previous video about your 1.2 million, your first raise, and you cried yourself to sleep for 6 weeks.
And it didn't happen.
Yeah, you were worrying about it and it didn't happen. Yeah.
It did not happen.
It's good perspective, right?
It's crazy. It's like when you said that and I heard you say that, I was like, and I'm an anxious person by nature. Like, you know this about me. I'm the safety captain of our group. Like everyone is always making fun of me because I'm always like seeing where that one little thing can go wrong and trying to mitigate the risk.
You were waving the flag in the boat and we were on the tail.
Yeah.
We were on the platform on the back of the boat.
Because I was like, well,
you might get run over.
No one knows. Like, it doesn't hurt to be safe here, right? So seatbelt. I make everyone wear seatbelts all the time.
And life jackets, even though we're still on the dock.
That was the first question I asked you, right? I was like, where are all the life jackets?
Yeah. But you know what? Being such a cautious, anxious person by nature, this should give you reassurance because Veena raises millions and millions of dollars to do real estate. So you can do this in a very methodical, safe way, the right way, which is why you have Nick here, your attorney, with us.
I take him everywhere.
Yeah.
Because
you want to do the things the right way. So if you're like, man, that sounds very scary, just know that it's only scary because you don't know what you don't know.
You haven't done it yet.
Yeah.
It gets less scary every time you do it. I always joke and say that Nick is my emotional support lawyer that I bring with me everywhere.
Yeah, he didn't know he was signing up for trauma therapy either.
For real. Yeah. At community camp, when I was speaking, like the day before, I was like, okay, so we're going to get on stage and we're going to speak up this. And he's like, what do you mean we're going to get on stage? I was like, because I want to make sure that people are getting the right information. And it's so important that it comes from somebody who knows about it. And it's really important that you're not getting just any attorney, right? So this is actually a great segue into the first step for starting your own fund is finding your power team, right? And that first person you need is your securities attorney. And so when I'm doing any deal from my first deal to now, my first call is to Nick.
Step one is your securities attorney.
And it's when you first have the thought. If you watched any of these videos to now and you were like, I am going to raise capital, or I really should raise capital, that's when you need a securities attorney.
So it's not download a form off the internet to start your fund.
Please do not do that. For the love of God, do not do that. Because when you make a mistake in this regard, it is not like, oh, I need to call in a new contractor, I have to repaint. The stakes are way higher.
Depending on what it is, it could be millions in fines, it could be jail time. It's a big deal. The SEC treats it very seriously.
Yes.
Because we can't be taking people's money and mismanaging.
Correct.
Right?
I mean, the SEC is there to protect investors.
Yeah.
And part of that is making sure that you have done the proper due diligence and you've structured it properly and you're following the rules. The rules, as much as they might be annoying or hard or difficult to follow, if you don't follow them, it's much harder to like go to jail.
And I mean, this is what I've gathered, talking to Nick and having him on previous videos, is a really good securities attorney is going to help get context in what you're doing. And they're going to help you decide what's the right vehicle. Yeah.
And actually, I think that's a good point. So when you're going out and you're raising capital, you don't have to decide if you're going to do a Reg A or Reg CF or a 506B or a 506C. That's not something you have to go. You should understand them. So conceptually, you're going in and having a higher level conversation and maximizing your time with your attorney. Yeah. Because, they bill by the hour. So they're like, great, let me teach you all about these things.
That's why he says it depends.
Right. And
that's one, but the real reason is he needs to understand what you're trying to do.
Because it changes things, right? Yeah. And so what a good securities attorney will do, and like you said, they're not created equal. Same thing with like accountants and tax strategists, they're not created equal. And when you have a really good one, what they're going to do is they're going to ask you a bunch of questions to try to understand who you are, who you're raising capital from, what's your strategy, what's your sophistication level, what are your needs? And then he will recommend to you which one you use. You don't have to go and be like, oh, I want to do this. You're going to just tell him the world of everything that you are looking at and then let him make that recommendation to you.
Yeah. So you can't even do a fund until you first have your securities attorney.
Correct.
And you've defined clearly what it is you're trying to do. What investment are you trying to do?
What it is you're trying to do. What what you're trying to buy. So in your case, you're doing a hotel fund.
Yeah.
Right? Okay. So you're going to come to Nick and you're going to say, hey, Nick, I'm going to raise primarily from accredited investors. I want to be able to freely talk about it on YouTube stages, when I go to parties, when I go to church, whatever it is, right? You want to be able to freely talk about it. And I need to raise, let's talk about a $10 million fund. Actually, that's small. I wanted to say 25 million.
25 feels right.
Does it feel right to you?
Yeah.
Does it? Because it felt right to me when I was thinking about your fund.
That feels good.
25 felt right to me too. Okay, good. Okay, I'm glad, because I was worried if I said 25 million, based on the conversations we've been having this week, I was worried that you were going to be like, no, I'm not ready for that. But I'm so glad you got on board like so fast.
Well, I'm looking at, I have 2 LOIs. Now I've got flexible due diligence on it because I know the owner really well and he wants to participate. So we're having these great conversations, but those 2 deals alone are 15 million.
Great. Okay. And so you'll need what, roughly like 7 for each?
Yeah. Well, they're
in equity
because they're value adds.
Okay. Yeah. So so maybe a little more than 7, 8.
Well, they're about, so just call it 4 million each and another 4 million in improvements
each.
Okay.
So 8 million each. Okay.
Yeah. So around
8 million each. So 15 million. And then that's just 2. And then you have the one you already own. The one,
which is around 3.5 or whatever.
Of equity, right?
In it now. Yeah.
Yeah. Okay. So that's 19 million, 19 million. And then you add 1 or 2 more, you're at 25.
More,
perfect.
Yeah.
Okay. So we're talking about $25 million. So you're going to say like, I need to raise $25 million. So automatically, you know this now, and you guys know this now, but we're knocking out Reg CF. It's just not possible because you can only do 5.
Right. We talked about that in a previous video, Reg CF.
Yep. Regulation crowdfund, that doesn't cover what you need. We know Reg A could work, but this is a long horizon and you don't want to wait that long.
Yep.
And you don't really want to bear the expense unnecessarily. So you're going to tell them you want to raise your capital from accredited investors and social media. You want to raise
No
$25 million.
relationships.
You don't want to have
ideally.
pre-existing relationships.
Guys, if you missed that video, really awesome. We had
Yes.
Nick. He broke down all of the different exemption types of
Yes.
regulations, or what do you call them?
Yeah, exemptions, the different exemptions that you can rely on. And so likely 506C, Reg D 506C is going to be the right fit for you.
And Nick confirmed that too.
Yes, and he confirmed it too. And so you're going to go to Nick, you're going to say, "Hey Nick, I want to do a raise. This is why." And then because you're more sophisticated now, having watched these videos or participated in these videos, you guys can go to Nick and say, "I was thinking a Reg D 506C works for these reasons." And then he'll ask you follow-up questions and he'll either agree or he'll say no. And you can have a higher level conversation. Right? And so that's why it's important to go in with some baseline knowledge so that you can have those better conversations.
Oh my gosh. This would have been, imagine how valuable this playlist would have been when you did your first fund. I mean, really.
I hate that I didn't have this.
Yeah.
It would have changed.
I say that
everything.
all the time about just my YouTube channel in general.
Yeah.
When I first started wholesaling and flipping,
Right.
if there would have been a Flipping Mastery YouTube channel, how much I could have jump started
It's
my
like
progress.
it's like skipping to like step 10,
Yeah.
maybe even further.
I mean, honestly, I say this all the time. I tell my kids this all the time. It's no longer, we no longer live in a world where it's a lack of information. It used to be, there used to be a paywall
Yes.
to learn these things,
Not
right?
anymore.
Not anymore.
Not anymore.
Now it's who takes action, right? Who implements.
Yes.
The people who implement are
Yes.
the ones that actually rise to the top.
Absolutely.
But it's not the information anymore.
It's not. And with AI, it's
gonna
100% not the information.
Yeah. In fact, AI is making it to where you don't even need to know how to research.
Yeah.
I used to tell my kids, you need to know how to research.
Not anymore.
Now you just need to know how to ask the question. You don't even need to know how to research.
Yeah,
really.
you have to prompt it. That's it.
And it'll
It's
tell
crazy.
you.
It's crazy how times are changing. Well, so, okay, the first step is getting Nick, right? Or whoever your attorney is.
By the way, we have a great securities attorney. We'll put his information below.
Yes.
He's been on previous videos.
So that's the first step is getting yourself a Nick.
Okay.
Okay, then
Step 2.
Step 2 is going to be understanding your investor avatar, which we did a whole video on it. We're giving you guys the workbook in the free kit to go through that. And the reason why you have to understand your investor avatar is because you need to be able to tell Nick about it, but you need to know how you're going to market this and how you're going to advertise this. And if you don't understand that, you really can't do a successful job of that.
It's why I've been falling on my face in Puerto Rico, because I haven't understood my avatar.
Yeah.
And so then I've been talking to the wrong person and struggling to raise money.
And spending a lot of time. And then what happens too, when you get 100 no's, what happens?
You start to get discouraged.
Yes, because then you're like, is this even a good deal?
Yeah. Maybe this
no one
doesn't
else
work.
sees it. Maybe I'm just crazy and I see this in a way that I shouldn't be
Or what
looking
people
at it.
tell me, you can't bring money here.
Can't do that.
People
Yeah.
won't do it or whatever.
Yeah.
Just because you've been
It's a
talking to the
limiting
wrong
belief.
person. So that avatar, that was a major transition for me in all of this.
Yeah.
Was really grasping the value and the importance of an avatar.
Yep. And
So
look,
watch that video if you missed it. What Veena did is she broke down how to identify your perfect avatar. And when we say avatar, the type of person that you want to target for raising money.
yes, who you're speaking to and how you're speaking to them, right? So let's talk about it in the context of hotels in Puerto Rico.
Okay.
Right? So the biggest challenge you have is an investor education problem, right? Because you're having to go to people who are used to investing in single family homes. They want to see comps, right?
Yeah.
The problem there is hotels in Puerto Rico, they have comps, but there's a wide range of comp sets. And it is a very fluid industry, right? Like I bought a hotel last year. I bought a Hilton in Ohio, and that thing is producing so much cash flow. It's unbelievable.
Doing good.
And it's way more tax efficient than any other investment I have because the FF&E, the furniture, fixtures, and equipment of hotels is so high because they have like beds and nightstands and all the
You can
things.
write off more.
So my tax benefit, I have so much more depreciation on hotels
Yeah.
than I do on any other asset class that I'm invested in.
How many doors do you remember?
No, like 200
Okay.
something.
The normal size. That's
it's
like a normal size.
Yeah, it's like
hotel,
a
right?
small to mid-size hotel. But the thing about it is when you are speaking to investors, I can almost guarantee that the investor you need to be speaking to is one that has a tax problem, because they're going to be the ones that are most likely to invest in this.
And what's great that you helped me see was I can make a really good, alliance to that, because hotels in Puerto Rico have all of the same normal benefits of a mainland depreciating asset, right? And then some additional ones.
Right. So you have really opportunity zone, which is crazy, right? And then you have your tax credits, right?
So the tourism department offers additional tax credits if it qualifies for what they call hospitality, which is basically seven doors and up. There's some other things, but basically think bed and breakfast, boutique hotel to big hotel.
So if I were going out and raising this fund, right, the first thing I would do is I would create a comparison chart. So I create a comparison chart of investment in the US, a hotel in the US, and this is what projected returns would be, right? And I don't know what those are off the top of my head, but I'm going to make it up for argument's sake, right? So I would say, okay, if you invest in a similar asset in the mainland US, it would get you a 15% return. Okay. But if you invest in Puerto Rico, same identical or similar asset, but in Puerto Rico, which is still in the US, and I would emphasize that because I think that's a big mental barrier. In the US still, but on the island of Puerto Rico, you would get a 22% return on your money. And I think that that is very powerful to show the stark contrast between a mainland investment and an island investment. And then you say, here's why we can do that. And you explain all of the things that we just summarized, right? Like the tax credits, the hospitality designation, all of that.
Because your internal rate of return includes the total benefit, right?
Yes.
That includes your tax.
You can.
Yeah.
You can include it.
Okay.
And I would include it in this scenario because I would show, and then I might even show a third category without the tax benefits that you are getting in Puerto Rico and compare Puerto Rico with no tax benefits to Puerto Rico with tax benefits. Right? So if an investor does not understand your investment or what they're investing into, that's your fault. Because it's your responsibility to educate them properly. And you didn't understand where their barriers were.
Because people don't invest in something they don't understand.
They don't, and they shouldn't.
Yeah.
Right? And the other thing is people invest with people they know, like, and trust. And to build that trust is by showing them that you understand where their limitations are and you help them get past that.
And it's a given already because I've seen you do this, but you also show, here's the location, here's why this is good, here's the demand for tourism. All those things you do that no matter what.
Yeah, but those aren't as important to the deal.
Because every deal's got that.
I mean, no one
What's special about hotels in Puerto Rico?
Right. Like no one puts out an offering and is like, this is kind of a bad location. It's not really great. We're not going to do that. Well, like who does that? Right. So everything looks shiny and amazing. Right. Yeah. Population's decreasing. No one really needs this service. Like
all the hotels are vacant in the area.
No one does that. So you want to be pointing out the things that make it different and better and unique to Puerto Rico.
Yeah.
And so that's why you understanding your investor avatar is really going to change the level of conversations you're having. And the other thing I had said on stage the other day was a fast no is way better than a slow yes, because otherwise you're spending time talking to someone and convincing them to see an opportunity. Whereas you want to go to the investor that already knows there's an opportunity there and understands the opportunity and is like, yes, I want in, write a check.
So it would be so much better to talk to an investor who already gets it,
right,
versus trying to pitch somebody on why this is so much better than what you're already doing.
Right.
I mean, you're already 5 steps ahead with them.
Right. And so you can just raise capital much faster in that regard.
Super smart.
And once you raise the first few million, it's much easier to raise the next few million. So because then you're going to understand who you're pitching to, how you're talking about it. You're going to understand the questions that investors are going to ask you.
And they're going to see a track record.
They're going to see a track record. You're going to have other investors in the deal, right? So like, for example, if I write a check into this fund, now you're going to go out and you're going to be like, okay, Veena has already said, yes, I've invested my own capital, right? You're going to already have all these mini proofs of concept. Not that me being invested into a deal is a reason that anyone should invest into a deal, but it certainly doesn't hurt that someone might look at this and say, I don't know how to vet this, but I know Veena's already bought a hotel. I know she's already bought and sold all this other real estate. So she has certain systems and processes or analysis in place that she's going to run that I can not rely on, but I can be assured that
leverage some of that.
She's done it. Yeah, right. Exactly.
Well, it's like I tell people all the time, and this sounds like the same thing with doing deals, is, your 10th deal is going to be 10 times easier than your first deal.
Yes.
And your 100th deal is going to be 100 times easier than your 10th deal.
100%.
And I'm imagining funds and raising money works the same way.
Absolutely. And also the thing that I think you're going to really have a lot of success with in Puerto Rico hotels is that you already own a hotel. So what's going to happen is you have minimal downtime in your fund. So you can raise the 3 million or 1 million or 5 million, whatever that number is, right? The first million, let's call it $1 million. You raise the first million into it. You can immediately deploy that. So that capital is starting to earn money right away. Whereas a lot of times, and I face this challenge in my deals, because a lot of times I'll do like a single asset, not a multi-asset fund. And when I have one single asset, I have to wait until that deal closes before the capital can start working and making returns. And sometimes that's like 2, 3, 4 months. And that's
no
a
return
heavy
on,
right? No return because I have nothing is sitting there. It's in escrow.
Yeah.
And so I think that you're going to have a lot more success because you already have such a big springboard that a lot of people don't have. I still don't have that in my deals today usually.
Yeah. So that's great. I'm really excited about that.
Yeah.
Okay. So then that would be?
Okay. So it's first and second. So call Nick, investor avatar. Yep. Third is going to be, you need to get your systems and processes in place.
And what does that mean? Systems and processes.
Okay. Every business owner knows this. The more you can systematize, the more you can standardize, the more you can have processes and SOPs, the better off you're going to be. There's no question about it, because you cannot raise $65 million the same way you raise $1.2 million. It is impossible. And I hate using that word because I like to think that like nothing's truly impossible. This is something that is impossible. And the reason is when you're raising like your first fund, what you're going to do is you're going to go and you're going to start calling everybody you know, right? You're going to say, hey, I'm really excited about this opportunity. I have a new fund that just launched in the hotel space in Puerto Rico. It's amazing. And you're going to spend 30 to 60 minutes with every single person. You can do that when you need to raise $1.2 million. If everyone's writing a $100,000 check or $50,000 check, you're talking to 12 to 25 people. So you're talking about like 30 hours of your time max. When you're trying to raise $65 million,
can't possibly do that.
It's not possible in the time frame you need to do it unless you have a really long runway, which in most real estate deals, we talked about it earlier, you don't have that kind of runway. So then what happens is you need to be able to do a one-to-many model. So what our process looks like is we send out an email to all of our investors with our offering memorandum, and we'll go into what that looks like, break down everything in a future video. But
you'll hear that called an OM.
Offering memorandum.
Offering memorandum.
So you're going to go through an offering memorandum and you're going to send that out to all of your investors. Then you're going to do what we do next, which is a conference call. So I invite all of our investors to join a webinar, conference call, and then we send out the recording of that. So now I've spent an hour, maybe, I try to keep them shorter, but let's say an hour, where we've reviewed the entire deal, start to finish, all of the exciting things, where the risks are, how we mitigate them. Yeah, right, exactly. This is not the legal document where it is marketing materials that we can say nice things about it, right? And then from that, most of my investors will already make a decision to invest or not.
So Veena, sorry to cut you off, but is that because they saw the OM and then the next decision was, I want to get on this conference call because the OM excited me enough for step 2, which is, let me hear this out. So that's the filtering process, right? Like if they're not even interested, they're going to look through that OM in 5 minutes and they're going to decide, yes, I want to know more, or no. So it's how you're filtering out that's the one-to-many process.
Yes, the one-to-many. And also too, from just the OM itself, I have a lot of investors that just make a decision based off that. Yeah. Especially if you're a visual learner, like you don't really need to hear me explain it to you. If you're an auditory learner, then you're going to need to hear me say it. And if you're both, you want to be on the conference call because you're getting the best of both worlds, right? Okay. So yes, it is a filtering process. And what you're going to want to do after your conference call is you're going to want to have a mechanism for investors to ask you follow-up questions, because not every investor is going to really understand 100% of what they want to or need to before making an investment decision. So you need to have some kind of follow-up process to that, right? So you'll want to follow up with them or have them be able to reach out to you or your team. When you first start out, it's you, unfortunately,
Yeah.
but you have infrastructure. So you might have a team when you do your first raise. And so they'll reach out, they'll ask questions. And usually it's going to be like the same 20 questions. There's not going to be a huge variety of questions because everybody really wants to know about the same things. If you've done a really great job in your conference call and you have the proper structure, then you've probably answered most of those questions, if not all of them.
So in my case, Veena, would it be, there'd be an offering memorandum about hotels
Yes.
in general, not any one specific asset?
Yeah. Yeah. So
Okay.
because we're talking about setting you up in a multi-asset fund, and we're going to do a whole video on that too. But basically you're going to have multiple deals in there, and some of them you don't know yet. So those ones that you don't know yet, we have to kind of take a best guess of what it looks like. And we have to tell the story about why anybody would want to invest in this. So we're looking at class B, class A, whatever, between 7 or I don't know what the smallest amount you would consider, maybe 20 units to 200 unit hotels in Puerto Rico that have a value add component. Like that might be your target criteria. So you're going to put in like why you chose this, why this is a great area, how it's going to make money, what your business plan is, why you're targeting these, what experience level you have, your bios, your, all of your information that you think an investor would want to know should be in your OM.
Gotcha.
Then your conference call can add color. So it can add things that would be kind of awkward to write. And I'll give you an example. So we have an asset we bought at the Atlanta submarket. Really beautiful asset, amazing area. And when we went and did our due diligence, what we found out was that the Atlanta Falcons players actually live at our asset, especially when they're rookies, because we were really close to the practice field. We did not know that. And so when we're on a conference call, I'm telling the story of how we discover that there's all these Falcons players that live there. All the rookies live there because they don't know how long they're going to be there, if they're going to get traded.
They might have 1-year contracts or whatever.
Right.
Yeah.
So they don't want to like buy houses. So they rent because it's a really nice area. We have really great school districts. So if they have families, then their kids can go to the nice schools. But also they're only tied in for a year because we can only do a year leases there. And the investors loved that story. Like I had investors that invested because they're like, oh my gosh, I'm a huge Falcons fan. I'm like, I don't know if that's a good reason to invest in this, but okay.
I don't know what that has to do with anything, but yeah.
Right. But, it's the intangibles that you can put into the conference call that you can't necessarily do. And it would be weird to write that out in an OM.
Gotcha. Yeah. Yeah, that makes sense. And you can do that on the conference call.
Right.
Okay, so you're creating sort of a funneling process,
Yes.
right? The PDF OM to
Yes.
the conference call. And these
Yes.
are what you're referring to as systems and processes,
Yes,
right? You're
this is our process.
Because you're going to have hundreds, potentially thousands of different investors
Yes.
in a fund.
Yes.
I imagine too, as part of systems and procedures, since that's step 3,
Yep.
step 3 to your first fund, is also next steps for your investors.
Absolutely.
Right. So I
Yes.
have that. I have I tell my investors on just normal private investors,
Yeah.
like on residential real estate,
Yeah.
hey, you're committing to lend me money on a deal. Here's what's going to happen next.
Yes.
This is going to happen.
Yep.
There's going to be a closing. You're going to
Yep.
do a wire to title,
Yep.
blah, blah, blah. Then,
Yep.
then there's going to be, so that's really important too, that you have that
Yes.
succinct and organized to help
100%.
them know what happens next.
100%. And we do that. So at the end of our conference call, we do, hey, here are the next steps. If you're interested, go fill this out, do this. This is going to happen. You're going to get 1,000,000 pages of legalese that's going to tell you that everybody is going to lose their money. This is the worst idea you've ever had.
Your health is going to be worse.
Yeah.
You're
Your
probably gonna
neighbor's
get-
cat will
you'll get
die, like
divorced. Yeah, all of
everything.
it.
The
Yeah.
sky is falling down. And it's, it's a formality. We have to do it. It's all Nick's fault. He makes us do this. But it's there to protect you as the investors. It's there to protect me as the sponsor. And it's, just something we have to do, but expect that. Feel free to read through it, have your attorneys review it, business advisors, whoever you need to make a proper decision for you. And then if you're comfortable and when you're ready, you sign the documents, then you wire. So we give them the whole entire list of exactly what happens and how it happens in the timeline.
Okay, so step 3 is those processes, systems. Step 4?
Step 4. Okay, this is actually the secret.
Why do you always save the best stuff for last?
Because
To reward the viewers who are still here.
Right, I need them to know that because they have to get through the boring stuff first.
Yeah.
Because it's important, even though it's kind of boring. And then I want to reward you. It's like the carrot and the stick, the carrot and the stick, right? Okay. Partnerships will change your life.
Partnerships.
Let me revise that. Good partnerships will change your life.
Not all partnerships.
Bad partnerships will also change your life, but not for the better. Ask me how I know.
Yeah, me too.
And we've all done it, right? Like we've all kissed many frogs to get to our prince. But when you have a good partner, many things happen. So if you're in the multifamily space, right, you need to have an acquisitions partner, a capital partner, and an operational partner. I would venture a guess that in any space in real estate, those are the three kind of corners of the triangle.
Let's define those. An operating partners on the ground, doing the day-to-day, running the thing.
Once you close, what happens? Who's executing the business plan? That's your operational partner.
Operation partner.
Acquisition.
Acquisition. Okay, so you got to have someone.
How do we find the deal?
Right.
What are we putting the money into?
Deal hunters. Yeah.
Right. The people who are going to find, underwrite, do due diligence, get the deal closed over the finish line so they can hand it to the operational partner.
Gotcha. And what was the third one?
Capital,
right?
Yes.
The three prongs.
Yes, those are the three prongs. They're like the trinity of real estate investing.
That's actually no different than all real estate.
Right.
Yeah.
And that's why I think it's like wildly applicable when you can know and understand all three of these different pillars or cornerstones of this triangle. Pyramid. Is it triangle or pyramid? It's triangle. Pyramid has too many points. We can only do a triangle. Okay, so the triangle.
I'll take your word for it.
Yeah. I mean, you just trust me. I had a not 4.0 in high school. So when you have all three of these pieces, though, you can go so much further and you can scale up. A lot of people walk into real estate, new investors, right, and go, oh my gosh, how am I going to learn all this? How am I going to do all this? You shouldn't. Pretty much ever. One, it's a lot. Two, you're almost guaranteed to only be mediocre at two of those things and great at one of those things. The key or the secret is to find the people that are good at the other two things and go partner with them, right? Go find the people that are great at acquisitions and operations so that you can go raise the capital if that's your superpower. And what I would say is if you are watching this and you're thinking like, oh, I'm acquisitions and operational, that's great, but you should always be working to be capital too. So you should be at least slightly capital intensive.
Yeah, it's really interesting you say that because like when I teach how to build a flipping business and I kind of create these different boxes and say, okay, well you have acquisitions, you have dispositions, operations, and then there's funding. And I personally treat the funding category or department or whatever you want to call it as one of the most high level activities you can do as a business owner in real estate. Meaning if you get a team that does everything else, if you have to pick one thing, I would say pick capital.
Yep.
Let's break down review the four. So first one,
call Nick. Get a securities attorney.
Call a securities attorney. Yes. Nick's info's in the description below. Two
is investor avatar. Know your investor avatar.
Know your avatar.
Understand it.
3, processes, systems.
Processes and systems. You need them before you think you do. And it's much easier to set them up before you need them than it is to go back and reverse engineer.
And your attorney can help you if you're unclear, maybe.
Yeah, on what you need to do. Resource? If there's any question on like the steps to make it a truly legal and proper investment, your attorney can help guide you through that.
And then the fourth one?
Fourth one is partners. Find the right partners. It is rocket fuel.
Before we wrap up, real quick question on those partners. Do they need to be equity partners in the deal?
Not always.
Okay.
Not always. And think of partnership in more than just one, like a two-dimensional way, right? I consider my securities attorney my partner. I consider him a partner to me because he is so integrated in my success in this deal. I consider our tax strategist a partner. No, they're not direct partners in the deal. They're not equity holders in the deal. You know, I pay them to do the professional services that I need, but they are partners. I think of our vendors as partners. I think of our investors as partners.
You're referring to that more as just key people to help you be successful.
A power team.
A power team.
Yeah, a power team.
Now, an operator could be a 10 or 20% owner of the deals or whatever.
Sure.
Right. But it's not so much structure you're talking about. It's just the key power team to be successful. Well, really amazing, guys. Those 4 steps there, you've got that now. We're going to keep moving along as we progress through this series. Thank you again, Veena, for putting this masterclass together, your valuable time, having Nick, your attorney, here with you. And guys, please let us know how much value you're getting out of this. Leave a comment and let us know. It does matter. We appreciate you so much. And we hope that you can now go build your first fund, right? Don't think it's as intimidating. It's not as intimidating as you're making it be.
Yes.
Trust me.
Yeah.
That's my experience. So I'm telling you from experience, don't make it too intimidating. It's not.
Yes.
And we'll see you guys on the next video.